Смерть не страшна. Смерть не страшна. Okay, enough bullshit. All right, so the point is that the dollar is done, and more importantly for me is that my idea on US dollar yen is essentially dead. And that's not something to fear, it's just an idea, has been, and it has worked for quite some time, though it has now, in its previous mold of being a triangle, essentially died off. So that's an idea I just have to divest myself of and move on to work on something else. So I'm going to start with US dollar yen and then move on to the dollar pairs and then look at Aussie Canadian, Aussie New Zealand, and Euro pound, and those have been working fine. It's been US dollar yen which has been, its life expectancy has been truncated. It's fucked off, basically. So anyway, the idea I was looking at before, yeah, actually, I'll do this on the monthly. I already erased it. 1 second. I was modeling this as a triangle. So we would have from the 2015 high, A, B, C, D, E, and a move up. However, given the move down over the past 2 weeks, 3 weeks, it's come too deep for that, and it's looking likely to break this low, this one. Now, that doesn't entirely kill off the bullish view, but it's not far away from doing that. The key point in this will be this trend line going back to 2012. If this is broken, you see it receive multiple supports here in 2015, 2016 and Brexit. If this is broken through, then probably the whole bullish case will be over. And then I suppose it's looking at a bigger three-wave correction down. But I have an issue with this, but you know, my issues have nothing to do with the market. It's just my interpretation that I'll have to adjust. So I'm going to look to find support here. We may see a break of the September low. So it turns into a bigger three-wave correction, holds support and moves up. That is possible. So I'm not going to say that the bullish case is completely dead, but what is finished is the triangular case I was working on below. So for this, I don't have much to work on the lower time frames. I was trying to work a divergent gap, a separation here, but since stocks are under the 20 and are rolling over again, that is finished, and yesterday's bullish looking candle has been reversed in full. So there's nothing to work with on the daily time frame. There will be a setup on the 4-hour time frame possibly, but not yet, maybe going into the trend line. So that is the next point to look for support. Probably seeing a break of the September low. So I'm going to remove the triangle idea, and I'll look at this next week to see if it possibly turns into a bigger three-wave correction here. It's not really looking like it because this part's quite sharp right here for the last 3 weeks. But honestly, I don't have much else to work with, and I don't have a bearish view. And I'm not so bullish on gold as it approaches 1400. I see more corrective state in that still, and a move back to 1200 still. And I don't think the dollar's dead either. That was all just a bit of spectacle. So let me go to the dollar. What I see here, I do see a bearish case overall in that we've had 5 waves down at least, and I went over this last weekend. It does, this whole pattern here does resemble the 2002 one here. There's a total overlap in look right through there, through that December candle 2002. Looks identical, so of course we can see a repeat and just see a descent through 2018. However, if you go down to the weekly, this segment here on the weekly of the 2002 part does not resemble the bullish divergence on this one. So I still think as we come into trendline support from 2011, 2014, 2018, we will find support in here for the dollar case across horizontal support and probably see a turn up. Now, in my opinion, this is going to be a corrective turn up, but that doesn't mean it, assuming it happens, it doesn't mean that it can't be quite a steep correction up, like way up with the appearance of making a new high, because I do not think if it moves up that it will make a new high. I think it will turn over. But the key right now is to find that low. Oh, I gotta fucking erase this now. Okay, hold on 1 second. I'm gonna do this first, and you can observe the mess I made in my life by stretching X's and requiescatin, I don't know how to say the Latin, rest in peace signs across. But in any case, 1, 2, 3, 4, 1, 2, 3, 4, 5 probably for 5. Now, I got a couple cases on this. The point is to look for the divergence. For the turn up. The divergence has not been negated. It's a bit steep, but it is still legitimate. The key point on this, by my reckoning, by the style I use, is that the divergence should hold basically above the 20 line here. And if we can find a low next week and a turn higher, that will open the pathway for a move up for the rest of 2018. It is hard to find a divergent play in an impulsively trending market, because this is a full impulse down. It's hard to stop out. Unlike US Canadian a couple years ago, well, okay, it only feels like a couple years ago. Last May, when there was this divergence play from May, that I was talking about in the videos. Bearish divergence, that was easier to work out because it was from a corrective movement. Much easier to stop the trend. In an impulsive move, it's hard to stop the trend. So that's what we're dealing with here. So I'm going to look for that next week. Now go into the time frames, pardon me, the counts on the time frame. I don't have it modeled on the DX, but I have it modeled on Euro US dollar, which is essentially an inverted replica of this. And because of the 50% weight of the euro in the DXY, they're essentially, opposite patterns. So I have a model here that I'm using. I have 2 counts on the Euro US dollar, and they repeat on the DX. So this is what they look like. Just imagine it opposite. Here we go. Wave 4 into here as a triangle. A, B, C, D, and E. And from the triangle low in December, 1, 2, 3, 4, triangle 5. So the assumption with this is that it's finished, and we're going to see next week, with price closing within the previous wick, a rollover and a move down with the whole 2017, 2018 move up completed. I find this count useful because it prevents me from having to force a count for 5 waves here, because to me this is clearly 3. Now the other count, if this does not roll over, I have another count here which is not yet finished, and that is this one. So wave 4 is into here from Jan 217. So wave 1 I have to force it, wave 2, and then 1, 2, 1, 2, 3, 4, 5, and we'll need to see a bit of a correction. 4, 5 up, 4 down, and bigger 5 up to complete. So that assumes another high or 2. I'm going to work the other case for now, but it hasn't proven itself. Now, if we look at the move down on Thursday, there was a very good sell-off on Thursday. It did not make 5 down. The best I can do with this is 1 and 2. 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, and then a little wedge here for 5, but the wedge truncated and did not break the low. So if you want to take that as 5 down, in my opinion, you're going to have to accept and force a truncation here. If you want to take it literally, then it's only 3 waves down. And that leans itself towards the second bullish count I showed, which has a few more gyrations higher. Right now, I'm going to look for the downside. I'm going to see at least if it gets another correction down and then a move up. So I'm going to see if we can work the downside. There's no point working the upside at this level, in my opinion. It's come up very high, so I'm going to assume that it's either a truncation or part A of a 3-wave correction before the resumption to finish the set of waves. So one or the other. So I'm going to look to the downside. This is up at resistance here at 124, 125, 126. It can extend, but it is essentially there. Now, I went over this back in 2016 when the triangle was completing. This move here from 2008 to 2017 January is a correction of this here, of 2000 to 2008. This is the bullish move. This is the corrective move. Impulse, correction. And in my opinion, we are seeing the resumption of a long-term bullish trend. If this finds a high, we can get a series of 3 waves and then the resumption of trend. To what degree that's how that 3-wave correction develops, who the hell knows, but that is what I'm going to work on. One other thing I will mention that I talked about, or that rather that I polled on Twitter today, is that if we do finally get a high on this to complete 5 waves up, 3 into here, 4 into here, well, here or here, and 5 into here, there is a very picturesque price gap there at 107. So gaps are usually filled. Now, of course, up here at 124, it seems ridiculous to think that a gap at 107 might be filled, or rather will be filled. If it does correct down, I think there's a pretty good chance this will happen. We'll see, but gaps are usually filled. And the other point to make is that wave 2s, this would be wave 1. Wave 2s tend to be quite steep because the traditional Elliott wave interpretation is that wave 2s give the impression of larger trend resuming. And that people, just as they're very bullish at peaks, they will get very bearish down here and they will assume that it's going onwards to parity when in fact, before it reaches the low, it will turn around. But in any case, that's just, a consideration that I have. So in the near term, off the 4-hour, I'm going to work this to the downside and look for another move down for either the end of trend and the beginning of a new downtrend, or at least wave C of another downtrend. Now, it is possible, of course, that this sharp move down is the whole correction and we go straight to a new high to complete this count, and it goes straight up to finish this one, and that this was here. But I can't know that now. I'm just going to work on the odds on this, that the downside is either done, or rather commencing, or near. So that's that. Pound US dollar, it is very difficult to count this. Now, someone asked me about a truncation. In the videos I was making earlier in the year, back in the summer, I talked about this perhaps being a truncation. And I had completely forgotten about it until someone reminded me of it last week or the week before. It's still possible this was a truncation, and we now have the beginning of a new bullish trend. And to justify a bullish trend, you would have to take this something like a wedge to here, wave 1, wave 2, 1 of 3, 2 of 3, and then we see here 3 of 3, and so on. So we're talking about a very big move up above Brexit. This does not connect well with the dollar, with the idea of a dollar turning around. How you take this bearishly, maybe we need to see a 5-wave move here for like a C impulsive part to end this, and then a move down. But honestly, I have no bloody clue how to count this. I don't know how to count it. All I can say is that I'm looking at this to enter major support, turn resistance. Okay, going back to the 1980s, we have a broken support level which will turn, perhaps, may turn into a new resistance level. Now granted, back here, this is the initiation of the whole like price interaction area. Back here, it kind of blew through this, but there's a difference between that move in 1985 and this move in 2017, in my opinion. This is clearly impulsive. Look at the speed of it and the strength. This is relatively choppy. So I would favor, with the stocks coming up here, we will see resistance. Now resistance, as you can see, the 55 monthly EMA has interactive points in the past, not there, but here, 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 and again here at 142 and change. It's interacted and it's turning down. We may also see a bit of sideways move if the pound is a bit stronger into trend resistance for a few months. I don't know how it's going to go, but I would say that in this box here, I'm favoring the downside. I just cannot put a count on it. From the high, well, to me, it looks like 3 waves again. I suppose you could try to force this into a wave 5 here, but well, the word force is probably more important. You may be able to work some kind of correction here and see a corrective move down if it holds beneath this high. But this pair doesn't interest me anymore. The good times on this pair were here. It doesn't look good. Here for the breakout, flag breakout, flag breakout. These were all 3-wave corrective moves, and these were the times to buy. These were simple spots to buy. So what it's doing now, I'm not sure. We'll have to wait and see. Okay, I'm going to move on to pairs that I have a better grasp of. Let's start with Aussie New Zealand. This was good today. It found the low 2 days ago on the New Zealand news. First of all, there's trend support in here. We were looking at a couple of variations on this. It ended up finding trend support, sticking the support, moving up very violently, and then it corrected in the last few hours with a simple 3-wave correction here. And now it's impulsing up. So any 3-wave correction of this is going to be a buy. You can make a case that 5 waves are about to finish. 1, 2, 3, 4, 5 probably coming up. But in any case, the bottom line is that any 3-wave move is a buy. What we're looking for, as in we as in me, is that we're going to end up seeing a head and shoulders pattern here if the trend continues. And across here, 114, I'm going to look at that as the first target where sellers will start to come in. I don't think it's going to stop there because I think on the monthly, I'll go on the weekly, it's a bit easier. I'm looking at this as 3 waves, X wave, 3 waves, 3 waves, X wave, 3 more waves. New high above 114. So above here. So this has approximately 400 points to run. It's been a very bullish turnaround this week. This is the Head and Shoulder, the shampoo. Okay, so first target 1114 here, 1114, and then above that 114. Total bullish reversal. Yes, the stochastics didn't make it to the 20 line, but price is bullish. There's the trend support I showed on the daily. It's broken out of a, was that October, mid-October corrective channel or pattern, and it's looking higher. So all three wave corrections are buys. Everything's a buy. Buy, 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 buy. It's pretty straightforward anyway. Euro pound, this did see the sell-off here from the three-wave high. And which, was this on the weekly? Yeah, the weekly mini shooting star did end up holding. Now, it's reversed very strongly this week. I'm going to continue to hold the bearish view on this. My view has not changed. All this, it is essentially still in this support region. But I think we can count 5 down. I mean, there's this boxy region. It didn't make it up to the top end again in the end. But I think on the 4 hour, we can count this. It's broken out of trend, as you can see. We can count this from the 8 December high as 5 waves down and completed. So any 3-wave correction, if it is corrective, I'm going to look for another sell into that next week and try to find a continued move down towards 85, and then if it breaks through that, towards 83. Now, a lot of the wick, there's a lot of wick showing here and a lot of buying pressure from the low, so it's possible this is turning into something else, but because of the downtrend, the 5-wave, I think it's 5 waves that started here. I'm going to look for a chance to sell this next week. I don't see this as bullish, really. I think the move up from, when was that, July 2015 is done. So my view is to continue down with this pair. Now, Aussie Canadian has put in a more bullish move that I wanted to see, but that's okay. That's just how it is. The daily price is holding above the stocks at 80. What I was looking for was a 3-wave move back down to see a bigger 3-wave correction, either to here and up or breaking down even lower and up. But the trend support line has been what I was aiming for. What it ended up doing this week on the 4 hour was just putting in a minor 3-wave rather, correction and then thrusting higher. Now, it's possible this new high is going to cause it to put in a bigger correction now. I don't know. I'm just going to say that the trend is up here, and then I'm going to look for this to continue overall for now. It's just my bigger idea is that everything's been in 3s, and I'm looking forward to continue in 3s. So here in this is a resistance level here at 10040 basically. So if it continues up a bit higher, may see some pressure. But in any case, it remains bullish, mainly, or rather most importantly, on the monthly. It's bullish. The monthly is the bullish picture here, and on the monthly, it is going higher. So target just above parity. Target above that, 102 to 103 up here at trend resistance. And then a breakout of that, well, you can see a new high above big W over there. The Canadian dollar looks kind of weak at this stage. The other US Canadian pairs are more confusing to me. Euro Canadian, I'm not sure about. And US Canadian, I think there's a chance to find a correction in here. It didn't work out it hasn't worked out so far, but there's a big amount of divergence here, so I'm going to look for that into next week and see if it can find support above the wave 5 low here for another corrective move up. because it is still essentially in that region. So finding a dollar low next week in this pair would set it up for a move higher. Okay, just a second. Euro pound, Aussie New Zealand, Aussie Canadian. Regarding New Zealand US dollar, I'm not paying so much attention to this, but I am looking for it still. I am still looking for it to turn over and to turn back down beneath this high. I'm looking for traders to come in and to sell this off before it reaches a new high. But I don't have a strong interest in this, so I probably shouldn't speak about it. I am looking for US Canadian, Aussie US dollar now to make actually, I think today made a new high. Is this going to turn into just a bigger three-wave move? Maybe. Who knows? Something to consider. But again, this is not a main interest for me personally. Okay, gold. Gold is interesting. The issue I have with gold is this. Looks corrective. This looks like, okay, let me take this literally. This looks like 3 up, 3 down, and another move up. 3-wave correction, another move up. All overall, to me, it looks corrective. Now, doesn't mean it can't be bullish, doesn't mean what I see is correct, but what I see is a corrective move. And what I have in mind, I have 2 things in mind. One more likely than the other, if either one happens. And that's, we're looking at a bigger 3-wave correction here, and then one more move down towards 1,000. I think this is probably less likely. But one thing I do like, I mean, because to consider we've broken out of resistance, and this is probably going to hold. But I can see a situation where let's take this as a 5-wave impulse, okay? So we see one move up, 3-wave correction, 3-wave correction, and then a move back down to 1200 for C of a correction. So you have basically a flat here. A, B, and C back to 12. The trend line holding at 12 or just under 12, 1150, whatever. And then a move up. I'm looking for one of those 2 things, either a move to parity, which I think is pretty unlikely, or a move back towards 1200, which I think is more likely. So I'm looking for a down move as it comes towards. Now it's broken out of, well, okay, technically it hasn't broken out, but I'm not looking for this to triangulate as I see it anymore. I am looking for a move above the 2016 high. Maybe it won't happen, but right now I have in mind a bigger 3-wave move of some kind, 1, 2, 3, or 1, 2, well, this is B for this 3-wave move here. So that's what I'm seeing. So I'm going to look for this as it enters. If it breaks out here and it makes a new high into the high 1300s, 1400, I'm going to look for this to come into resistance here and turn lower. Maybe that won't work, but I think given how this looks, I'm not feeling that this is a super bullish move at this stage. Maybe it'll turn into one, but I can only take what I see in front of me. And that's what I see in front of me. I see a corrective move up from 2016. This is a correction down. 3 waves. This to me looks like 3 waves up. So I'm looking for this to turn over, and let's see what happens. That will really fit with the dollar picking up some some strength, and US dollar yen finding some support and moving higher. Finally, at least, we got US dollar yen realigning with gold in an inverted way. Negative correlation. Okay, so I think that's it. So the main thing for next week, dollar low. Either a couple more gyrations lower, as I showed on Euro US dollar, or the low could possibly be in. But wait and see. I'm fine with either. There will be a chance with either one. And Aussie New Zealand is the one to buy next week on every 3-wave correction. And Aussie Canadian may offer another setup. And Euro Pound, I'm going to look for another setup to the downside. But Aussie New Zealand is the one that's paying. So look for that for a move up to 11140 at first. And maybe a base in US dollar yen. Okay, enjoy your weekend and get your stress out while you can. Bye-bye.